I want to quickly compare and contrast Affirm, Klarna, and Sezzle. We're talking here about buy now, pay later apps for big purchases up to $10,000. Don't go anywhere. Welcome back, folks, to another edition of the Awesome Story Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you're to ask me, if you are doing as great as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to speak to you about buy now, pay later apps for big purchases up to $10,000. So we have Affirm, Klarna, and Sezzle. The thing here you have to understand is that credit cards have been they've been around for a while, for many, many decades. And nowadays we have a new entrant in the industry, and buy now pay later apps are pretty good. BNPL, they're fast, they're very responsive, and they adapt to the situation. And so there are benefits of those apps for consumers, but also to the merchants who are making them available on their websites and on their website or at their stores, right? What are the benefits here? The benefits of BNPL apps to consumers: so you have deferred payments, risk-free purchases, convenience, and cost. You have to understand credit cards are costly. So choosing an interest-free payment plan with pay later services and making your payments on time is a nifty way to save cost. And you can think of this as a free loan if you this is because this is what it is. As long as you pay the balance within the allocated time. In terms of convenience, this is pretty cool also for consumers. And besides benefits for consumers, BNPL again, buy now, pay later apps provide benefits to merchants. So you have increased sales, right? Because if you allow your customers, as a merchant, if you allow your customers to pay in installments, they're more likely to buy higher ticket items or buy more items for you. This is just very simple, right? And then you have access to new customers. If you are a merchant that allows BNPL apps, you can build trust and loyalty, and you can keep up with the competition. It's all about keeping up with the competition. And there are, of course, when you have benefits, you also have risks. So what are the cons of adopting buy now, pay later apps such as Affirm, Klarna, or Sezzle? Risks to consumers: it encourages consumer debt. You may have an impact on your credit score, and it's more expensive. One thing a lot of folks forget is that the BNPL service is a loan product. Some consumers will likely misuse it and find themselves with more debts than they can handle. So be very careful there. And there are also risks to retailers. If you're a retailer, as I said before, there is more of an upside than a downside to integrating the later pay services. However, you have higher fees. This is a big disadvantage here. You have higher fees because, consider this, the credit card companies such as Visa and MasterCard charge a processing fee of between 1.43% and 3.5% for every transaction. In comparison, BNPL services such as Affirm, Klarna, or Sezzle they have on average a transaction processing fee and a purchase value fee at the rate of 2 to 6%. Think about that. In total, this could add up to as high as 8% for a transaction, depending on the BNPL provider. This is really expensive. Okay, that was a quick convo about the situation of the buy now, pay later apps today. Let's just get into the nitty gritty here. First, we have Affirm. Affirm, what are the pros and cons here? With Affirm, you have quick access to cash. So the app is excellent if you need to make an urgent purchase, but you don't have a credit card. Good interest rates. The interest rate offered on the purchase is much lower than what you would get elsewhere. And you can take time making your payments. They will let you make consistent payment consistent payment spread over a long time. They will give you up to 18 months or 24 months. What are the cons here? You will not get approved if you don't have good credit, and you'll need to have a good credit score to qualify for an Affirm loan. What we've seen is that they've been relaxing the requirements lately, so they have started to accept also people with fair credit scores, and you may have to pay a down payment. So you may have to make a down payment. So for some borrowers, Affirm asks for down payments that must be paid during the purchase, and this can be anywhere from 10% to 50% of the cost of the item. So the bottom line you have to understand here is that access to an Affirm loan is easy, but you gotta know how to work through the system. Affirm is basically a loan financing company. So it allows online shoppers to purchase goods and services from online vendors and retail shops on credit. And the credit can be paid off by the buyer through fixed monthly payments over time. And the main benefits of taking the credit facility route through Affirm is that they don't charge the clients any fees in terms of late fees or delays, right? And the company also charges no service or prepayment fee and any other hidden fees. The lender offers up to $17,500 to client in financing directly through its partnering retailers. We've seen in our research that there are some people who qualify for $2,000 in terms of Affirm loans. And one thing, the interest rate, if you do not actually pay on time, you may pay from 0 to 30% interest rate. You need to have good credit or fair credit in some cases, and there are various repayment methods. So you can be approved for a 3-month repayment, a 6-month repayment, a 12-month repayment, or in some cases a 24-month repayment. Okay, and before you can make purchases through Affirm, you'll need to have an account with the lender. It's very important. You need to go to the website. You need to actually be 18 years old, and you need to be a permanent resident or citizen of the United States to qualify. You must have a cell phone number and agree to receive text from the company. It is also ideal to have a credit score of at least 550. We also love the fact that if you are trying to really if you want to grow your credit, if you want to improve your credit score through Affirm, and at the same time buy the clothes or buy the home decor items that you want to buy, it's important to have a budget. And you want to really plan things clearly so that you never, ever miss an Affirm payment. Because once you do that, the interest rate is going through the roof. The service is free. There's no charge. They make their money through the merchants, right? But they also make their money on you if you fail to pay on time. And there are other features. When we were analyzing Affirm, there were other features that we loved. For example, you have the credit building. So if you don't have a high credit score or are new to the credit rating system because you are young, or you may have had some issues in the past in terms of your financial history, you will not necessarily be approved, but you will not be approved at most banking institutes, right, for credits, banks or credit card companies. However, you may find it easy to qualify for a loan at Affirm. And they also actually, we love the fact that they have additional security. So not only are they helping you build your credit score, your credit history, they also offer you a way to manage your financial situation, your financial life, and all of these things help you have a higher security in terms of financial security, but also in terms of personal security. And we love the fact also that everything happens on your phone, right? Everything happens on your app, on the Affirm app, and they have strong encryption protocol that allows you actually to be safe, that everything is fine. Your private data will not be compromised. What are the terms and rates here? So I said loan amounts up to $17,500. Typical APR if you do not pay on time, 10% to 30%. There is no origination fee. The funding time is immediate. Payment plans can go from 3, 6, 12, 24 months or 36 months. And there are longer terms available at some retailers. And they do a soft credit check, not a hard pull, a soft credit check. And Affirm is really great for borrowers who are new to credit, who want to pay for a big purchase over time. So again, as I said, they will accept. They say that they want to cater to good credit borrowers, but in reality, they accept all kinds of credit histories, including no credit, bad credit, and fair credit. Let me now talk to you about Klarna. Klarna is great for buy now, pay later credit for online purchases. So in a nutshell, if you want to make a purchase and pay for it later, the Klarna app lets you split your payments into installments. So it pretty much does the same thing as Affirm. but I'll tell you a little bit about the differences later on. You need to keep in mind though that there may be fees and interest charges depending on the repayment method you choose. So what are the pros and cons here? The pros: you can use Klarna at any US retailer accepting credit and debit cards. There are no membership or annual fees. You have multiple repayment options available. What are the cons here? You have late fees and return payment fees. Longer financing terms might require a hard credit inquiry. This is one major distinction between Klarna and Affirm, because Affirm only does a soft pull, whereas Klarna goes real hard. They do a hard credit pull. And you need to know that actually Klarna is a Swedish company. They were founded in 2005 in Stockholm, Sweden, and they are an app for borrowing money. Like competitors Affirm or Afterpay or Sezzle, Klarna helps you finance retail purchases and pay for them over time. And you can use Klarna to make purchases at any US retailer, either online or in store, but they do prefer online. And they actually will love the fact that there are no annual or membership fees, and you can choose from 4 different repayment options. So you can pay, for example, you can pay in 4 installments, you can pay in 30 days, you can pay later by card, and you can actually set up a Klarna financing account. So if you choose to pay in 4 installments, you use your own debit or credit card to pay for your purchase. The initial payment is charged to your card when the merchant processes your order, and the next 3 payments are automatically charged every 2 weeks after you make the first payment. There are no interest charges and no fees if you stick to the automatic payment schedule. You can pay in 30 days, that's fine also. And you can pay later by card. So when you pay later by card, you can add your items to your card and check out with Klarna. And you need to enter your credit card or debit card details, and that card will be charged 30 days for the items you decide to keep. And Klarna may issue a small verification charge of up to $1 that you will be credited back, because they just want to see things that things are clear. And because this option charges your credit card directly, keep in mind that you may have to pay your credit card's APR. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. We are still comparing and contrasting today Affirm, Klarna, and Sezzle. So before the break, I was just talking to you about Klarna, and I want to continue about Klarna here. Klarna has late fees or return payment fees. I mean, while they don't have annual fees, you may face return payment fees or late payment fees if you don't pay the full amount required by the due date. Depending on which repayment option you have, late fees range from $7 to $35, and return payment fees range from $25 to $35. And with Klarna, you don't have extended warranty or return protection. Some credit cards offer extra benefits, such as extended warranties or return protection, but if you pay for purchases with Klarna, you're not eligible for those perks. Instead, returns are subject to the store's return and refund policies. Okay, and so when it comes to here are a few more things you need to know about Klarna. So you can download the Klarna app via the Apple iOS App Store and Google Play Store. You have promotional offers, so you can get access to exclusive deals and promotional offers through the Klarna app. You can also save items to a wish list and receive notifications when prices drop. You have the minimum spend with Klarna is just $10. So this is pretty cool, but you should carefully consider it before, because if a purchase is that small, why would you want to finance it? Okay, and there are some rewards also. So Klarna allows customers to join Vibe, its rewards program, and you will earn 1 Vibe, Klarna's version of rewards points, for every dollar spent through the app. And you can redeem your rewards for gift cards from Amazon, Best Buy, Sephora, and other major retailers. So when we think about that, Klarna is who is Klarna really good for? I mean, while using credit or financing to make a retail purchase is not really ideal, there are some cases when you may need to buy something before you have enough money to actually afford it. Whether you need a mattress so you have a place to sleep, or a laptop so you can work, Klarna may be able to help you purchase what you need quickly. Okay, and Klarna can really be less expensive than credit cards or personal loans if you opt for its pay in 4 installments or pay in 30-day options. And those payment methods don't charge interest or fees as long as you make your payments on time. But if you can't pay off your financing that quickly, you may want to consider another option, such as a credit card with a longer 0% APR promotional financing offer, for example. Okay, so to apply for a Klarna account, it's very simple. You need to download the app. You need to connect your debit or credit card, and you need to start shopping. And they will actually review your application, and everything is fine. They do actually they perform soft credit checks. All right, not hard pull. They only do a soft pull. I want to talk to you now about Sezzle, the third app in today's conversation. So Sezzle offers interest-free buy now pay later financing for purchases with thousands of online retailers. And if you want to spread out costs and cannot afford to make payments on time, Sezzle is also maybe a good option. But fees kick in if a payment fails or you reschedule a payment more than once. That's actually the catch-22 here. And what are the pros and cons? Pros: no interest on purchases, no hard credit check. Simple, very transparent payment plan. We love that. Kudos to you, Sezzle, for that. And now on the flip side, on the cons, fees, you have fees for failed or rescheduled payments, lower limits for first-time shoppers, and you must contact the merchant for refund. So Sezzle is not really handling that. If you have a problem, you are on your own. You need to contact the merchants. They're not getting involved. And so one thing I just want to say about Sezzle is that it's basically a buy now, pay later financing option for online purchases, just like Affirm and Klarna. When you have a Sezzle account and shop online at a participating merchant, you'll have the option to choose a Sezzle loan as your payment method. You can shop through Sezzle's app or website or through the merchant's online storefront. Okay, and they have interest-free loans. In other words, as long as you are basically you pay back the loan within the allocated time, you're fine. And sometimes they might ask you for a down payment. They don't check credit, all right? So based on the situation, based on the loan amount, and based on your personal situation in terms of your finances or that kind of stuff, because they have algorithm to check all that. And based on that, they might ask you to actually make up to 25% in down payment. And Sezzle does allow you to use a credit card to make payments. So keep in mind that even if you make your interest-free Sezzle payments on time, if you don't pay your credit card balance in full, you could still face interest charges on your purchases. So you can actually apply without affecting your credit. So they have a soft credit check, and as we all know, a soft credit check does not hurt your credit score. And the app offers instant approval. And there might be possible fees for failed and rescheduled payments, as I said before, okay? And now, if you are a new customer, what they do is they first want to give you a small amount just to see how you handle it. So we've seen in some cases they were approving people for amounts ranging from $50 to $200, and then for your first purchase, and then as you pay back that amount, they could really increase your limits quickly. So one thing you need to know, other things rather, that you need to know about Sezzle is that they are actually available at more than 24,000 online merchants. This is pretty cool. So you can use Sezzle for online purchases at thousands of stores, such as K9 Ballistics, Mel Cosmetics, and Dude Perfect. There are restrictions after failed payments. So after a failed payment, Sezzle will restrict you from placing any new order, and they have limited customer service. And what they do is if you have a question or if you have a problem, Sezzle suggests contacting support with complaints via an email form. And if you prefer phone calls, it's worth noting that it's not easy to get a live person on the line, and you can find the customer service phone number on the Sezzle legal definitions page. Okay, and Sezzle may be a good option for smaller online purchases if you can afford a 25% down payment and you can pay off the balance within 30 days or 6 weeks as scheduled. And you will not pay interest and can avoid fees with 3 on-time payments, which could be cheaper than the average rate you will pay if you use a credit card, right? So the bottom line here is that if let's say you make 25% down payments, the other 75% is split into 3 payments, and as long as you make that, you're fine. And to apply with Sezzle, you need to be at least 18 years old, have a US or Canadian mobile number that can receive text, and a working email address. And you'll also need an active bank account, debit card, or credit card. And you can start using Sezzle by signing up for an online account. The company asks for your first name, last name, mobile number, email address, date of birth, and a PIN. You also have to agree to Sezzle's user agreement and allow the company to conduct a soft inquiry on your credit. So after receiving security codes to confirm your phone number and providing your billing address, your profile will be active. It's very simple. It's straightforward. And to start shopping, you'll need to verify your Sezzle account via email. You can complete the purchase process through, as I said before, more than 24,000 stores, and you can choose Sezzle for a payment at checkout. And if you want to pay off your Sezzle app purchase sooner, there is not a prepayment penalty. And we love the fact that you will not have to pay a fee to move a payment date earlier. That's fine too. And you can see and increase your credit limit by joining Sezzle Up, which is another level here. This is another dimension here. And Sezzle Up actually reports your payment history to the credit bureaus. And to join Sezzle Up, you'll need to link a bank account, pay off one order on time, and provide your social security number. Okay, folks. So you heard the comparison here. You heard the compare and contrast between Affirm, Klarna, and Sezzle. So which one to choose? It really depends on a lot of things. Now, Affirm is right for you if you are new to credit. You are looking for you want to make a big purchase and you want to pay that purchase over time. I want to emphasize the word big here. Large amounts, 10,000, 17,000, 20,000. Sezzle is good for smaller online purchases if you can afford a 25% down payment and can pay off the balance within 6 weeks as scheduled. As long as you do this, you will not pay any interest, and you can even avoid paying the fees. Okay, and but the thing is, if you cannot pay off your balance within 6 weeks or use a credit card to pay off your Sezzle balance, you may want to explore other options with a longer payoff timeline, like a 0% APR credit card offer, like I said before. Okay, and so if you love the fact that you want to finance the purchase without a hard credit check, you can actually go with Sezzle. What about Klarna? Now, while using credit or financing to make a retail purchase is not ideal, Klarna can help you in specific situations. With Klarna, we're looking at, so if you think about it, Affirm, you have high amounts in terms of purchasing. With Sezzle, you have low amounts. With Klarna, you have something in between here. So we're talking here 5,000, 7,000. Okay, and if you, let's say you need a mattress or you need a new kitchen, that kind of stuff, you can actually use Klarna for it. And Klarna can be less expensive than credit cards or personal loans if you opt for its pay in 4 installments or pay in 30-day options. So those payment methods do not charge interest or fees as long as you make your payments on time. But if you cannot pay off your financing that quickly, you may want to consider other options. Again, you can go for credit card or other kind of loans. The bottom line here is that whether you choose Affirm, Sezzle, or Klarna, make sure that you pay the full balance within the allocated time. Otherwise, you're going to be faced with a lot of fees. Okay, and at the end of the day, it's a matter of personal preference. It's a matter of the kind of merchant coverage they have. In other words, let's say you're trying to buy in a store, right? And Affirm doesn't cover that, and neither does Sezzle, but Klarna does. So you're going with Klarna because they have within their merchant network the store where you want to buy the stuff. So there are several criteria that will help you make a decision at the end of the day. Having said that, we actually prefer Affirm. Our pick is Affirm, and we score this app 10 over 10, Sezzle 9.5 over 10, and Klarna 9 over 10. Thank you so much for your attention, folks. Really appreciate it. I'll speak to you another time. But until then, remember, stay marvelous.